Morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the Dow Jones Industrial Average, being recorded on Sunday, September the 28th at 10 a.m. Pacific Daylight Time. As always, when I do my weekly updates, I'm going to start on the maximum amount of data that I have. And in the Dow Jones, that data goes all the way back to 1902. So I have approximately 123 years of data in the Dow. How I started my count as I'm going all the way up to the grand supercycle degree, and that is where R.N. Elliott started his, and so I'm taking it from his original works. And so I have grand supercycle 1 completing in 1929, grand supercycle wave 2 completing in 1932. So we're really there. From that point, we started a grand supercycle third wave. Now, this is where a lot of contention can really begin as to what people feel, where the current market is, and what kind of a top we're reaching. So there's going to be a lot of different opinions, but this one's mine. And mine suggests that we're in a grand supercycle wave 3 and have been in one since 1932. So what's going to be inside that grand supercycle third wave? It's going to be 5 waves of supercycle degree, of which, in my count, I have 1 and 2 are complete. So we are in supercycle wave 3 of grand supercycle wave 3. So what's going to be in that supercycle third wave? It's going to be 5 waves of cycle degree, of which I have 1 and 2 complete, and we're getting ready to complete that cycle wave 3. So, in essence, then, we're in cycle wave 3 of supercycle wave 3 of grand supercycle wave 3. So, Elliott made mention often, as does Elliott Wave International, Robert Prechter. They make a lot of mentions about a 3 of 3 move. So, really, what it is the third wave within the third wave. They're very powerful because we have to understand the characteristics of a third wave is that they are most often the longest and the strongest of a 5 wave advance. So out of waves 1, 3, and 5, wave 3 is most often the longest and the strongest. So if we're in a 3 of 3 move, that's even going to present more strength. So, and that's what we've been actually seeing. So we can move up within this cycle third wave. There are going to be 5 waves of primary degree of which 1, 2, 3, and 4 are complete. So basically now we're in primary wave 5 of cycle wave 3. And I can tack on the others, but I'll keep it right to that cycle degree. So now I'm going to bring it down. What's going to be inside of primary wave 5? 5 waves of intermediate degree of 1, 2, 3, and 4, again, are complete. So I'm going to bring this down to the 5-year weekly chart. And that's going to show us intermediate wave 3 and intermediate wave 4. Intermediate wave 4 bottomed in October of 2022. So from that point, we've been tracing out an intermediate 5th wave. And once it's up there, what will intermediate wave 5 in turn complete? So let's take it one step lower, and then we're going to add it all up. So within intermediate wave 5, I'm going to have 5 waves of minor degree, of which 1, 2, 3, and 4 are complete. Minor wave 4 completed on April the 7th of this year. So from that point, April the 7th of this year, the market has been tracing out a minor 5th wave. What's going to be inside that minor 5th wave? 5 waves of minute degree. So I hope you're realizing right now, everything is building blocks. The Elliott wave theory are building blocks from the smallest degree to the next higher degree to the next higher degree to the next higher degree. Now I'm just working it backwards, going from that highest degree all the way down to where are we on the near term picture. So we are in a minor 5th wave of an intermediate 5th wave of a primary 5th wave of that cycle third. So within this minor 5th wave, we're going to have 5 waves of minute degree, of which 1, 2, and 3 are complete. Now I'm going to bring it down again to the daily. And that's going to show us, there's minor 4. 1, 2, 3 of the minute degree. We're in minute wave 4. of minor wave 5, of intermediate wave 5, of primary wave 5, of cycle wave 3. So you can see how we just build it out. Now I can bring this down even more, and that's what I'm going to do, because now I want to bring it to how are we trading today? What can we expect moving forward in the very near term to the slightly longer term? What we're looking at is that we're inside of a minute fourth wave. So I'm going to bring it down to the hourly chart. Now I'm inside that minute fourth wave. There's the minute third. So we're in minute wave 4. Now, I need to take it out back to that daily for just a moment because we already can run our fibs, right? How it got left for us is that when we're in this fourth wave, what can we expect? Well, the fib levels that come into play here are 0.236 and 0.382, and that's what this is. So to measure that, we go from the bottom of wave 2 to the top of wave 3. That covers the entire third wave. It was pretty large, actually. And so we have 0.236 and 0.382. Now, Elliott left as a guideline that a fourth wave in motion will most often find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree. We're counting a minute fourth wave. So one lesser degree is going to be the minuet, and there it is. And look where it just comes in. At the most common level for a fourth wave is 0.382. It retraces 38.2% of that third wave. And that number is 43,294. The low of the previous fourth wave is 43,340. So it's within, I'm going to say, 46 points. It's 46 points between where the 382 is and that low of wave 4. So when we're looking for this fourth wave, well, we can say that, well, it enters into the territory of that fourth wave right in here. And I actually could probably move this over to here and would leave it. It's like 1, 2. Yeah, I can't. It's got 3 and a 4 and a 5, even though the 5 really kind of looks funky on the daily. So I'm going to leave that 3 there. In the price territory then, as well, within these two measurements, these two fib retracement levels. So now we can start breaking this down. Now I'm going to come down to that hourly chart. So what I've done, folks, is I've gone to the largest chart that I have, the most data that I have, and I've counted it all the way down to the hourly chart. And I'm going to take it down to the 15-minute chart so that what we can see is that, yes, we're completing a much larger move, that cycle third wave. But we can bring it all the way down to see how close are we to there. What's left to accomplish by the markets before we would think that this third wave is done? Well, that's where the fibs come in, Fibonacci relationships come in, and the relationships between the waves, and then our smaller count as well. So here we are. There's minute wave 3. That high came in at 46,714 here in the cash. So from there, we're involved in an ABC of minuet degree to complete minute wave 4. Now, initially, we kind of have an area. There's the 236. So, yeah, we're looking like it probably should come down to that level. But we're within the move. So we have minuet wave A of minute 4. Now we're working on minuet wave B of minute 4. Wave B is to the upside. The trend right now within wave 4 is to go down. We're correcting that third wave. So we should move lower. A wave is lower. A wave came out, as best as I can count, as 1, 2, 3, 4, 5. So wave A is 5 waves. So when we look at Elliott and how he described what we have in terms of the balance of this correction, so there are two basic patterns for corrective waves. The first being a zigzag. And that is where wave A will be 5, wave B will be 3, wave C will be 5. Well, how we're going to determine that is that wave A comes down in 5, which and here in the Dow is what it did. It came down 1, 2, 3, 4, 5. So wave A is 5 waves. So it always sets the stage that we're looking for a 535, a zigzag. The other is that it comes in what we call the flat uh, of a fourth wave. It's a flat correction. Now, what that suggests is that we have wave A, which what normally is going to come in as ABC. Rather than 1, 2, 3, 4, 5, it comes in as an ABC. And to be honest with you, yes, I probably could swing this around and it could be an A, B, and this is the C wave. But right now, I think it counts better as 5. So I think we get a zigzag. Otherwise, if it's a flat, then we're looking for wave B to likely go up to this, to be equal in length to wave A, and then wave C would be equal in length to wave B. So they're all in equal, and that produces a flat. So wave A and wave B does not exceed wave A, although in the flat family, that's where we'll find a lot more. There's 11 to 13 different variations of a flat correction. And that includes the triangles. That includes irregular B waves. And so if this was to be an ABC down to form wave A, then we have to include in that the possibility that the market can go to an irregular. And then we're looking at 1.236 or 1.382, and that would put us at a new all-time high above what we've already created and still be in a fourth wave. So we get a turn and a fly in back down. And then once 4 is complete, we go once again back up. Now, I'm not saying that we're going to get an irregular B wave, but I can't disqualify it and say no to it just yet. Okay, so let's take a look. Where are we inside? Again, this is the cash. So we have that wave A. Looking for the wave B. I'm going to bring this down to the 15-minute chart. So now we're down to intraday type trading. And again, there's wave A. And what we're looking for here is we're looking for, actually, this isn't ABC, folks. I just went back and looked at it. That's an 1, that's an A, that's the B, and 1, 2, 3, 4, 5 is the C. So it is an ABC down. So it does open this door. Now, I know when we're looking at it out on the hourly or higher, it really does kind of clean. Even here, I can go 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, or 3, 4, 5. Either way, but we got to leave it open. Right now, I have to leave it open. I'm going to leave it as a 5. So we're looking for the zigzag. And so, but we're in the B wave. So let's look at the shorter term. We're looking at a 15-minute. So we have wave A of B. We have B of B. We're looking for a C wave. And I can put up my first fibs for that wave C. So what is the most common? That wave C will be equal to wave A. And see where that is? 46,622. What is the second? 1.618, which is going to be way up here. Put it into irregular territory. Not looking for that right away. So what do we have outside of that? We have, and the third most common is 0.618. So, and that's going to come first. And what else could we run into here? Well, here we have what I believe is 1, 2, 1, 2, 3, 4, 5, 3. This is a 4. We got to come back up in a 5. Now, if that's the case, I can make this switch here. I know it's going to be very cagey, but let's see what we can come up with. I'm going to add the fibs for that fifth wave, and we're going to run it up to the fourth. And you can see, wow, look at that. It's because wave 1 was pretty small, wave 5 would also be coming in on the short side, or on the small side, I should say. So we're going to go in here, and I'm just going to stick this together, and we're going to see that we could come in at 0.618, right, for wave 5, which is the third most common. And I'm going to show you how that can happen. Here's wave, there's the one, and there's the 1.618. Going to put it like that, and there you have it. And here we have it here. So wave five, 100%, 46,300, but that's not going to work because we need it to get above the third wave. So I can go back in, I go like this, and I just take off that. In fact, I'm just going to change it to 1.882 because I think we have a fair shot of getting above this line, right? Which is 46,361, which is the B wave where it would be 0.618 of A. And that's pretty common. That is very common. So this zone is where I'm looking for the C wave and this fifth wave all to come into play and to finish. So basically, I got 46,361, 375, and 403. That's my zone that I think the C wave completes and we start to come down in the minuet C wave. And so what, ABC up, we're finishing the minuet B wave up here, and then we get into a C wave. Now, let's just take a look. I'm going to go out here. I'm going to put in, this is a guesstimate because we don't actually have that top in yet, but let's say it does come up. I'll go right in the middle to 46,375. I'm going to put that there, take this back out to the hourly so I can see it, and here we have it. Wave C would be equal, minuet wave C would be equal to minuet wave A at 45,440. If we already come down, if we have a stronger kind of a blowout for a wave C, then we can get down to 44,863, which is 1.618, where wave C would be 1.618 times the length of wave A, second most common. Third most common, again, is 45,000, would be 618. But I'm always going to be looking for wave C to come down and put in an additional low below the A wave, in this case. If it doesn't, then it's a failure, which still can happen, but then it's showing the underlying strength of the market. If we fail before making that additional new low, then the market's going to turn and we should go up very quickly and in minute wave five, right? We're completing minute wave four, looking for them for minute wave five. So the little bit longer term, right? Still a short term. This all could take place next week. We've got a lot going on coming into Tuesday, which is the end of the third quarter. There's going to be a lot of posturing. There's going to be a lot of positioning. What are they taking forward into the fourth quarter? What are they going to not want to take into the fourth quarter? So we're going to have a lot of that. Plus, it's just a large expiration. So we have a lot of different positions and options that will be ready to expire. Either they're going to get rolled out or they expire. And so we have a lot of other things that come into play that affect the movement of the index. And those would be where gamma levels are. And that will be more effective starting in the week, right? Because we have Monday and Tuesday. Tuesday is that end of the quarter. So I think we will have a lot of movement as options get cleaned up and ready for that expiration on Tuesday. Now, the biggest part of that expiration has been and continues to be that's where JP Morgan is going to come in and they're going to roll out that hedge that they have on their hedge funds. And that is a large position. And they won't do it until Tuesday, likely towards the close. But they will roll out, it's a collar. So they have short calls and they have short puts. And they have both, and that's how that's set up. So we're going to be looking for that. We're going to see where that all comes in. Okay, so what can we say then? Going from an hourly, we know that we have still that C wave to do. We know the market could be powerful, right? Again, coming into Tuesday, we might just get it all done by then. And then once we roll and we're into the fourth quarter, or it might take a little bit longer, what we also have coming up into October is that I believe that they start on the 14th, so it's either the 14th or the 15th, we start third quarter earnings. So again, let me just double check to see how we can take a look here. Now, the 15th of October, Goldman Sachs, the 14th. So yeah, they start on the 14th and we start with the banks. So the 14th and the 15th are going to be all the banks are going to come out and they're going to tell us how things went. And so that's going to kick off our earnings season. And then it just builds and it builds and it builds pretty much through October. We won't get things like Nvidia, I believe, until November. And there are other stocks like Broadcom. I don't think we'll get that until November. So this all goes out. And then still I have uh, AI. So we have algorithms that continue to suggest for the SPX and the NDX, right? I've not really run one on the Dow, but I can. Um, what the algorithms are telling us is that to continue to expect a surge higher in the fourth quarter, most likely December, that could push the market. Now, what are we looking for? Well, we're looking for the completion point of a minute fourth wave, and then we're looking for the starting of a minute fifth wave up. There will be sections of that fifth wave going up that should be surging, particularly the third wave, wave 3 of 5. If we go back and we look to see how long did it take for minute wave 3 to unfold? Well, there, April the 21st was the bottom of wave 2. September the 23rd was the top of minute wave 3. So we have May, June, July, August, September. 5 months. May, June, July, August, September. 5 months that it took for minute wave 3 to unfold here in the Dow. So is it reasonable to think that wave 4 could take a month, month and a half? No, I think it's very reasonable. And then we have minute wave 5. If we're going to just do a fib correlation between 5 and 3, well, if 3 took 5 months, could wave 2 take 2, 2.5? Yeah, it can. And where are we? End of 2025, beginning of 2026. So this all continues to fit in a time frame and just in an Elliott basis. We've kind of still working that we're moving higher to not only finish a minute fifth wave, but that minute fifth wave is then going to finish the minor fifth wave, which finishes the intermediate fifth wave, which finishes the primary fifth wave, which finishes that cycle wave 3. So I will be building back up once I get that fourth wave in. I would need to fill in all these spaces. And so I have taken down, I can go all the way back out to a 5-year. And say I can go out, I need to replace, bring a wave 1 up to wave 4 to get a intermediate wave 5. I can go out one more to get a primary fifth wave, and I will fill that back in. Right now, I'm still working on that fourth, and I don't need that overhang of what's up there that could kind of clog things up. But I'll reestablish what we're looking for in terms of our fibs going up. But right now, we're still concerned with we got to finish up this B wave, and I'm telling you, I think we can get that done between 46,300 to 46,400, all in that tight little zone. I think that's where we have a lot. And then we have the C wave coming down. C wave coming down. If we only get to 46,900, well, then we should get down to 45,440, and the bottom side being 44,865. So we have a pretty good little slide lower to put in here. And we have plenty of things going on that could provide it, that could do it. And it'd be nothing more than just adjusting for that or adjusting out once we start earnings. So again, there's a lot of things yet that could create the move. But I'm going to take this off for right now because we don't have that high. So we're going to look for that beginning of the week. And then we're going to see if we can't start that C wave down. If by chance the market just gives me, oh no, this is 1, 2, and we're going to get a 3, and we're just going to start to go. Well, the alternate here is that this is an ABC, and it is all of four, and it came in very shallow. Now, if that's the case, what's that telling us about the market? It's telling us that there's underlying strength, and that whether or not that strength is going to provide an exhaustive move up to additional new all-time highs, that, yeah, it's hard to tell from right now. But if we surpass and we start getting up above 46,500, 46,700, we're pushing to new all-time highs. 46,700, that is. We are now in new all-time high territory. And there, I'm more than likely going to put that minute four down here. Comes in very shallow for the size of wave three. Impossible? Not at all. Because again, year end, we got a lot of stuff, and maybe that's all we're going to get because there's still a lot of pressure underneath pulling the market higher. We will see. Right now, I'm not necessarily looking for that, but I have to include it to just say if just comes in that this is for that, even though it looks like three, it could be one, two, three, four. And one, two, three, this is four. And we go up and we put the first five up in. Not, I don't think so, because here on my 15-minute chart certainly doesn't look like it's building towards that. Right? Even though that could be one, two, wave four is way too deep. Way bigger than wave two. So I'm leaving it as an ABC up for wave A. There's the B wave, and we're putting in five up for C. So, and that's why I think 618 is going to be very crucial, not crucial, but very suggestive that that's where the C wave should finish up. And then we start the C wave down. And I think the C wave could be pretty forceful. And again, balancing it out against the news, I don't know. We have to wait. But I believe that there are enough things out there that we could have some serious downside slides. And we can go take a look and see, what numbers are really going to be we're going to be looking for next week. And in that case, I can just go quickly and take a look. Monday we have nothing. Tuesday we have trade deficit and consumer credit. Wednesday, minutes of the FOMC meeting. Okay, well that's the wrong week. Excuse me. That's the week after. Okay. Uh, Starting Monday, we have pending home sales, and we still have three Fed officials out giving speeches on Monday. Tuesday, we have Chicago Business Barometer, job openings, consumer confidence. Consumer confidence. That might trigger something. And then again, we have two. Wednesday, we have ADP employment, construction spending, S&P U.S. final manufacturing PMI, ISM manufacturing on Wednesday, and then on Thursday, initial jobless claims, factory orders, and Friday, employment report. So again, we're out to October the 3rd. That could be a major day. And it could be a major day that we kick off or add to a C wave down. Depends on what's going to come out with those numbers. And we have some on Wednesday that could also kick us to the downside. The ADP employment is going to depend on what it does. All right. So let's go over and take a look at the futures market. That's the cash. In the futures market, I'm just going to jump out here to the hourly. We're pretty much the same. There is minute wave 3, and we're coming down to minute wave 4. And I did already put that in. So there we have, there's the A wave. We're looking for this B wave to finish, dropping it down quickly to the 15-minute chart. And a little bit clearer that we have an A and a B, and then we have 1, 2, 3, and then a 4, maybe another 4 still in progress. But I'm going to say that it's a 1, 2, 3 up to there. That's the 4, and here we have our 5s. So we, again, what we really have here is 46,680 to 46,095. So basically we could almost go to 46,700. And that's going to be 100% for this C wave. where this that the fifth wave would equal the first wave, and that could complete the C wave, which in turn would complete minuet wave B. We have minuet wave B 0.618 at 46,694. And then we also have the C wave 0.618 at the same place. So I think we can safely call it saying 46,680 to 46,700. I think is going to be a zone that could complete the C wave, complete the minuet B wave, and set the stage for that C wave coming back down. And that's actually where I put my marker to give us just a clue of what this could look like. I'm going to go back out to my hourly chart. Now, mind you, that was a 15-minute chart. That's what I use to trade. I'm a day trader, so I'm in there every day. And I will use a 15-minute, a 5-minute, a 2-minute. And then I have other short-term indicators as well that help to just determine what's happening very much inside the hour. Okay, so, but here, again, 0.236 for minute wave 4 is down at 44,939. So where will we be looking? Well, there's the bottom of that 4. And so here's that angle of it. So 100% 45,733. See how it's just barely dipping into that price territory of the previous fourth wave. If we come down within it, anywhere in here, we're inside that previous fourth wave. If it's going to go the full 1.618, where wave C is 1.618 times the length of wave A, then we're down to 45,138. And that's assuming that we get up close to 46,700 to complete the C wave. Okay? Then we're going to down. Then we've got these levels. That definitively puts us right into that price territory of the previous fourth. And it would be a pretty nice little drop. And unemployment, there's a lot of things that could take us down there, folks. Really is. But the point is, once we get it done, I'm going to be looking for an ignition back up to the upside. And I'm not going to put my finger on, well, this is why. Market will tell us. So again, everything's looking pretty good in terms of still needing one last run. I know there's some folks that are thinking, no, upside's all done for right now. But that would put us into a much larger correction, which some people are looking for. And I'm not saying that they're wrong. I think that would be not the right thing for me to do. But I may say that they're early or I'm late, right? That how I'm counting it really should be counted at the 3 completed and the 5 completed on the minute degree. And if minute wave 5 is done, then minor wave 5 is done, intermediate wave 5 is done, primary wave 5 is done, and cycle wave 3 is done. So I'm not laying fingers or saying no to anything right now. The market needs to tell us. Now, the market kind of continues to show me, along with the algorithms that I'm running, that begin to offer some insight into what type of move we may still have into the end of the year. And still, they're saying, look for a surge, look for a move up. And it could be a strong move. So until I can get some additional information that would lean heavier, that nope, top is in, I think we still have an upside to do. And again, once we're underway, once I can get that fourth wave in and we're underway, then I will be able to fill in these upside blanks. Here's something else. If the downside kicks in again and we come flying through 44,000 or 45,000, I mean, start breaking our support levels. We start breaking through and just in a deeper slide. That's going to lean very heavily that this is not the top for wave 3, that it's likely finished the whole game. Is that possible? Yes, of course it is. But I believe that the count is suggesting it's only a third. We got a fourth, and we still have one last rise up. Even the underlying, even just the mood of the market continues to point that there's too many things that want to go up. Now, so collectively, I think when we're done, in my opinion, what normally can happen is collectively the market just goes whack. So we get big moves across the board in other indexes other than just the equity indexes. We're probably going to be looking at the dollar. We're going to be looking at Bitcoin. We're going to be looking at the precious metals. We're going to be looking at the treasuries. If there's something that definitively is suggesting a change is here. A change in the economy, a change in how we do business, a change in interest rates. If we start getting bad economic data that's going to squash any further rate cuts and maybe even lean heavily on the necessity for them to rein that in. We don't know. We don't know. And I'm not a fortune teller. So to say, oh, that can never happen, that I think is dangerous. And that can get, I think, can get you in, as a trader, can get you in trouble. So keeping everything on the table. And what I will add, again, I do not make trade recommendations, nor do I tell people how to trade. But I think it's like if you're holding out for that last bit, you might want to have an exit strategy that includes putting stops under here to if you're working profit, which a lot of traders are. They've been long and now they're just looking for higher numbers and maybe to get out. And that's not the wrong thing to do. You want to get your maximum, right? But I think that we need to put protection that we're not giving back large sections or large pieces of a very earned, well-deserved profit. So use stops. That would be my suggestion, my encouragement. All right. So basically, I'm going to flip out real quick and look at that daily, and we're just going to take a look at our moving averages. You see that? They are still in alignment to go up. If we were really getting popped here, and this is like, that's the top, I'd be looking for a little bit harder drops, at least to the eight crossing the 20 beginning to turn lower. Right now, the 20 is still angling up. The 50 is still angling up. The 200 is still angling up. They need to start going sideways to give some credence that we are getting downside moves. But they're not yet. So that tells me we got a 4, and then we're going to get a 5, and then we're done. Then I think it'll come down fast enough that the 8 and the 20 will have no choice. They will turn. And that's kind of on a moving average basis what I'm looking for. All right, I am going to finish it up there. So just to recap real quick, I do think we still have uh, minute wave 4 to complete, minute wave 5 up, and then once minute wave 5 is in, we are completing a very long list. It would be minute wave 5, minor wave 5, intermediate wave 5, primary wave 5, cycle wave 3. And then we start a much longer term. And just to kind of cap that off, what are we looking for there? That didn't work. My monthly maximum doesn't work in my futures market. I guess not. So I'm going to go out over here and go to cash market. I just want to show you there. Now, Elliott tells us again, we just figured out for this minute fourth wave that works on all degrees. So if we're dropping into a cycle fourth wave, Elliott, the guideline tells us that a fourth wave of motion will find its terminus, its endpoint, within the fourth wave of one lesser degree. If we're coming down in a cycle fourth wave, one lesser degree is primary, and that's why I've got that boxed off in the color green. Primary 4, that's it. And so we're going to come back into this price territory, which is pretty large, by the way. Has a top side of almost 14,000 and a downside of, oh, yeah, let me go like this. The downside is actually 7,000. That's a pretty big window. That's a very big window, to be honest with you. And this was the great financial collapse, interesting enough. So, yeah, there's a lot to be said about everything that's going on. All right, that's going to be it. Our next update will be next week.